Okay, so hello everyone. My name is Fan Yang. I'm the Chief Technical Strategist at FX Times, and I'm here today with FX Street to provide some technical setups and talk about some risk factors coming up this week. We do have some interesting setups in the majors, so without further ado, I'll just start. I'll start right away. Just remember, trading forex involves a substantial risk of loss and may not be suitable for all investors. Okay, so let's start with the euro dollar. Okay, so at FX Times, we have been talking about this 133 level, 132.80 level as an important resistance area. Okay, so far the market is having trouble with the 132.60 level. Okay, not really pushing to the 133 just yet. If you look at the 1 hour chart, you see the market pretty much flattening here, right? 132.60. But then at the same time, the downside is also protected by this rising trend line channel support at the moment. So, there is some topping. Maybe there is some intraday bearish outlook. But as the market approaches, 132, well, it's held above 132, but let's say as it approaches 131.70, it's gonna be challenged. Okay, the bearish outlook will be challenged for another rally towards 133. Okay, that's one scenario. That's a scenario where there's risk appetite. Okay, we do have the ECB coming out on Thursday, so maybe that is why the market is sort of flattening. We have some risk events, the ECB and the non-farm payroll. We did start the week with some poor Spanish GDP data. So, we're not getting a push, ahead of these risk factors. We're not getting a push to the upside and a slide toward our support factors here is imminent. A break below that would represent the market scaling back 2 weeks of rally, a little more than 2 weeks. And if we break below 1.3150, okay, and then we hold below 1.32, I think that would be a very clear sign that the market has a downside risk toward the 130 level, 129.70 level, where you see in this 4 hour chart is our support area. Okay, so that's ahead of the ECB, expect some sliding, but 131.70 down 131.50 will be an important support cluster to monitor. A break below that ahead of the ECB reflects some anticipation of a euro negative, ECB announcement or the Draghi press conference after that. So Thursday is going to be an important event to monitor. Let me just share with you the FX Street calendar. So Thursday, there we go. Okay. Oh, I don't think I'm actually showing the calendar at the moment. Here we go. All right, so this is the FX Street economic calendar, and you see European, the ECB interest rate decision on Thursday, May 3rd. Okay. All right. Okay, so back to this. That's your look at the euro dollar. Oh, okay, so let me just present the two scenarios. So one scenario, both scenarios bearish, with one possible bullish scenario from here. But I'm still looking at this market as I have a bearish bias towards the euro dollar at these levels, around the 133 level. So if the market bounces here instead of breaks below and ahead of the non-farm payroll, if it gets up to 133, I would be bearish on that. Looking at the 4 hour chart, you see this is a declining trend line. But after the non-farm payroll, if the market is not able to push the price back down to below 132.50, okay, and to test this channel support again. If we can't do that after the non-farm payroll, we are opening up 133.80, 134.80. Okay, so euro dollar definitely at the crossroad, rising trend line, declining trend line. Okay. Now, the pound dollar, another pair we've been talking about as far as looking at the resistance area. So we've been talking about this 163 level as an important, first of all, trend line resistance. Also, it was here resistance pivot in November of 2010. Okay, so key pivot 163. So far, market is reacting to that pivot, dropping down to 62.26 area. Okay, I think ahead up now for the pound. We had port GDP data come out last week, preliminary data for the first quarter, and it was negative. So that actually gives us 2 quarters of contraction. So that's a double dip recession right now in the UK. Okay, so what's warranting this rally right here? Okay, fundamentally, there's not much to support the pound, although the dollar is pressured because of risk appetite. But that's 163. We definitely don't have the juice to push above 163 from the fundamental side of things. Now, there are some PMI data. There's manufacturing, construction and services PMI spread throughout the week for April. So if that data further confirms that the market is indeed in a double dip recession, okay, by falling near 50, those numbers, or missing expectations, okay, you have pressure here for the pound dollar. Okay, 160.170 and 160.70 are 2 pivots to look for, or targets to look for to the downside during the week with those PMI data coming out. Okay, I don't think the market can push lower ahead of the ECB. Okay, the decline here is still within the scope of this converging of these converging trend lines, and within the scope, within the context of this rally here. Okay, so only after the non-farm payroll should we be able to see a direction from the market. Now, if the market does break lower, I think 160 is an important handle, and it also coincides roughly with this rising support here. Okay, so by Friday, if we break below this trend line and break below 1.60, and we open up some lower pivots here. Okay, well, first we should look at 157.80 and then 156.50. Okay, if that breaks, 156.50 breaks, we open up these lows down here, above, just above 153 and then 152.40. All right, so this is an important trend line to monitor. But if the non-farm payroll does not push the market lower, or even if it does push lower and it fails to confirm by coming back up, okay, the upside above 1.63 is 66, or let's scale it down a little. 155.40 area could be our next target to the upside above 163. Okay, so that is your outlook after the non-farm payroll. Before the non-farm payroll, I think the market doesn't have juice to break above 63, so I would look for some consolidation with the downside risk toward 160.70. Okay, and that is the pound dollar. Okay, now I realize I'm looking at these charts, and some of you might not be familiar with the tools, the technical tools I use. Some of you have been here. Boyke, for example, a regular here. So let me just talk about these technical indicators I have the 200 moving average, as well as going down to 100, 55, 21, and 8. Okay, these moving averages help to visualize congestion and breakouts. Okay, congestion / consolidation, for example, in this period here, when the market was whipping up and down the moving averages, it's sideways. Now it's accelerating to the upside. So there is that bullish structure in this moving average arrangement. Okay, the RSI here is 14-period RSI. You'll see me use the 40 and 60. The idea is that if the market is bullish, it should be able to push to 70, and then if it's persistently bullish, it should keep the RSI above 40 and push above 60. So right now we do have persistent bullish momentum. Okay, starting at the beginning of this year. Okay, but this could very well be part of an ABC wave within this corrective, or I should say consolidating pattern here we see in the daily chart. Right? In the daily chart, when we look back, not just the latest configuration for the moving averages, we see it has been up. We've been bullish here, then we've been bearish here, and then now we're bullish again. So we're whipping the 200 moving average going back to 2011, and basically this is a sideways market. Okay, so we're at sideways market at resistance with some short-term bullish momentum, short to medium-term bullish momentum, but we're meeting resistance with some overbought conditions. So that's why in the short term this week there is some downside risk toward 1.6070. All right. Okay, some other important releases and majors. For example, the Aussie Dollar. We have upcoming RBA decision later in about 12 hours. 12 hours and 15 minutes. Right now it's a little past. It's 12 p.m. Eastern time. The RBA decision is at 12:30 a.m. Eastern time in about 12 hours. So RBA decision. Also, you have China manufacturing PMI coming out a few hours before that. I think 3 hours before that. So the Aussie dollar ahead of that has already scaled back from an important resistance level. Let's take a look at the 4-hour chart. Okay, you see this resistance level 1.0452 up to 0.463 area. Okay, the market pierced it last week, but came down. It failed to follow through to end the week. Okay, and then starting this week, we had a kind of a retracement back down. Okay, this market looks like it's it was bearish here, then it turned sideways, right? And the most recent price action here in April, towards the second half of April, has been very bullish. Okay, but it's still within this context of a sideways market that came after a bearish market, right? So again, another pair in a crossroad ahead of an important RBA decision, or important risk factor, in this case an RBA decision. All right, so let's explore the possibilities here as the market tests 1.04. Okay, there is that upside risk coming from this bullish momentum that we had since mid-April. If you look at the RSI, after a tag 70, it has mainly stayed above 40. Here we dipped below 40, but we didn't sustain the break, and then it was able to break above 60 and tag 70. Okay, so we didn't really have a strong bullish momentum, but it is kept. Okay, so there's some bullish momentum developing at the moment. Okay, and the upside risk can be up to 1.05. I think this 1.0550 area. This is a key level to monitor. 50% retracement, and you have your some previous pivot areas around there. So one scenario right now is that we continue higher. Market fails to break below 1.04 ahead of the China PMI and RBA. Now, why is Chinese PMI important? Well, because China's economy, the Aussie is correlated to China's economy. China does import a lot from Australia, so Australia does export a lot of raw material and such to China. So if China slows, okay, that would mean the Australian economy might also slow a little bit. Okay, their mining has been, the factor for their economic growth in Australia, which has topped off. So mining has topped off, and if China continues to have poor or show some slowdown, the Aussie will have a tough time regaining these gains we had earlier in the year, right? Earlier in January, end of December, we had this rally, but then we've scaled down since. And if China's still slowing down, this 1.0550 area will be an important resistance if it gets there. Okay, up to really 1.06, where you would see, this topping, double top support. Okay, break above 1.0615 would be a major sign of bullish continuation. Right now, the market is directionless, right? Looking at this daily chart, it broke below the rising support here. Okay, but it broke it sideways. Okay, it also broke this recent declining trend line. So really, these trend lines no longer matter as far as the direction goes. The more important factors now, whether it can sustain this break above 1.0463 that we did last week. We broke through it, but can we sustain that this week? If not, and the market breaks below 1.04, breaks below this rising trend line, okay, this 200 moving average in the 4-hour chart, okay, and you see the RBA is expected to cut rates. So they do cut rates, but they also hint at further rate cut possibility. That's going to be bearish for the Aussie. Okay, so if the market breaks down below 1.04, let's look for a bounce from 1.0350. Okay, and then if that rally fails to break back above 1.04, we should be able to confirm the intent of the market towards these lows here, 1.0225 up to 1.024050 area. Okay. All right. So that gives the bearish outlook. So I'm giving, you'll see that I have some bearish bias. I prefer the bearish scenario right now for these pairs. All right. That's going to require risk aversion, and in Aussie, that's going to require poor China PMI, and at least a cut that we are expecting, the cut of the official cash rate from the RBA from 4.25 to 4. So 25 basis point cut is expected, and we have been pricing in that for the most part. Okay, so if there is no cut, I think there could be some bullish, at least some short-term bullish market in the Aussie dollar. Now, it depends. If there is no cut, but the language continues to, to indicate that the next meeting there will be a cut, or the consideration will be still very heavily on a cut, just not today, then the market will still see key resistance 1.0550, 1.06. Okay, but in the short term, a failure, a non-cut could boost the Aussie, especially if there is risk appetite. Again, if the manufacturing PMI is actually improving, and you don't get a rate cut, then the bullish outlook is very strong in the short term, at least towards 1.0550, 1.06. Okay. All right. Another pair I want to look at, very key levels right now, is the dollar yen. Okay, let's go to the 4-hour chart first. And in the 4-hour chart, we see this market trading in a very, behaving very well in a bearish channel. Okay, I was looking for a breakout here last week, but after FOMC and Bernanke, the market, actually here was Bernanke, market slid. Okay, so basically, from Bernanke's language, it seems like QE is not off the table yet. Okay, and without QE off the table, the dollar is still pressured. Okay, now the Japanese yen also had, the Bank of Japan stating that it is adding 5 trillion yen, overall 5 trillion yen to its stimulus package. Okay, which, increased it from 65 to 70. The market doesn't seem to be spooked by that and continues to put on yen strength. You're going to see yen strength across the board. Okay, and the ability to strengthen even against the dollar suggests that the yen is very strong. Okay, because in risk aversion, the yen strengthens and the U.S. dollar strengthens. Both strengthens. Okay, so it's no surprise right now with some risk aversion in the market that the yen is strengthening against other pairs, Canadian dollar, euro dollar, pound dollar, but it's also gaining against the U.S. dollar, which is supposed to gain from risk aversion. Okay, so strong market. Watch out. I am looking for some support here, but it's definitely important to look at the momentum at the moment. Momentum in the 4-hour chart, bearish, no sign of bottoming. Looking at the 1-hour chart, RSI also bearish. So there, with this bearish momentum, it's going to start to be oversold. It's, all right. Also, when you look at this chart, 1-hour chart, you see I use the Bollinger Band here, and I adjust the parameter to 3 deviations, 3 standard deviations from the 200 moving average. So that gives a pretty wide band. And when the market's tagging it, it could be oversold. Now, the fact that it's also expanding the Bollinger Band shows that, shows caution or provides caution that yes, even though it is oversold, this is sort of a breakout in volatility to the downside. And it broke below 80 pivot, broke below 80.28 here, and then broke below the 80 handle. So definitely be cautious that if you are looking for support here, you're looking at a counter trend market. You're looking at a counter trend outlook, at least in the short term. Okay. Now, why do I look for support? Let's go to the daily chart. Okay. In the daily chart, you're going to see 79.50, the area around 79.50 being a pivot zone. So you saw support here at 79.70. Okay, every time the market came up here, there was some reaction here again as support reaction. As resistance, there's reaction. So here again, it's going to be testing these levels as support. Okay, but with very heavy candle. All right. So be careful. You want to see it bottom out. Here's the 1-hour chart again. Okay, as the market tags the lower Bollinger Band. What I want to see before considering any bullish outlook from 79.50 is a bullish divergence with the RSI in the 1-hour chart. I would like to see this come back into the Bollinger Band, the lower Bollinger Band, and stay above it. Give myself the first higher low, and that would be an indication that the market is stalling at these levels. Okay, now the first target to the upside, since we're doing a counter trend outlook, first target is back to the 80 level, back to this consolidation area, short-term consolidation or near-term consolidation area. Okay. At max, since we are going against the trend, the maximum outlook should be up to possibly 81, which would be near the declining trend line, and then this 1-hour chart would be closing in on the 200-hour moving average, which represents sort of your mean price action. Okay, so I don't think if you see that this market has been bearish, our bullish outlook should be limited to the mean price action. All right, 81 being the maximum target at the moment. Okay, so from the 79.70 down to 79.50 area, and even a little lower, we could be looking for some bottoming. And if bottoming does come out, a bullish outlook still should be limited to 81 at the moment. Okay, of course, a break above 81. Okay, that should open up the bullish outlook, especially if you get some kind of pullback. That's gonna continue to create bullish structure. Then we can open up these highs here. Okay, this week though, I don't think such a move can develop from this week. We have Japanese traders pretty much taking some holidays, bank holidays in Japan. Especially I think Thursday and Friday. Okay, towards the end of the week, we're gonna get some lower volatility, a lower volume from the Japanese market, or from the Japanese market, who trade the Japanese yen a lot. All right, so Japanese yen here with for me, a bullish outlook from 79.50 if it does bottom out. Okay, if it fails, the next support for me is this pivot here near 78.30, which was you see resistance here, resistance here, resistance here, and it's also where the 200-day moving average is. Okay, so failure to bounce up from 79.50, or even if it doesn't fail to bounce up, but it fails to break through our channel resistance, and then we get another swing down. You see, at channel resistance, there could be renewed selling here around 81 or a bit higher. Okay, the target from there is back to 79.50, and if that breaks, that target could be down towards 78.30. 78.30 could be a level of renewed buying, however. Okay, again, within the context of a consolidation. I think this is a bearish market. Okay, but after a bullish market, a bearish market is basically consolidation. So the support will be important, but it's not bullish. And again, we should be respecting the channel resistance wherever that is from down here. Okay, that could be just up to the 80 level. All right. Okay, so that's the dollar yen. Okay. Another important yen pair, or another important development in the yen pair here in the pound yen. Okay, so let's go to the 1-hour chart. We are breaking below this channel support, which was at 130.17. We also broke below the 130 support, or 130 handle, and the 129.96 38.2% retracement level. Okay, so this market is in a bearish breakout. Now we're actually testing some important pivot. There's resistance here back in April. It's also the 50% retracement level, and in this 1 hour chart, it's the lower Bollinger Band. So if we do bottom out here, there could be a pullback, but that pullback should be, first of all, you should monitor the 130 level. Okay, so whenever you go against a trend like this, I think I would suggest a quicker trade management and bringing your stop break to break even, bringing your stop to lock in some minimum profit, because you're going against a trend development. Okay, the trend development in the short term is that we have a breakout and we could trend lower, toward 128.85, maybe even down to 128 level down here. All right. So, trade management and stop placement adjustment will be very important. It's always important, and when you do the counter trend, it's doubly, I guess, important, because of the possibility you're wrong, or the possibility that even though you're right in the very short term, it might not hit your target. In this case, I think the maximum target for a bounce from 129.40 area is up to 130.50 pivot up here. 131 is going to be important. This was the central pivot of the previous range that was broken. Okay, so if the market goes back up above 131, then this should be seen as a false breakout, or we could just say that we had completed a correction and there could be a bullish continuation. Okay, a break above 131 establishes some kind of bullish bias in that we had a rally here, the market fell to 50%, and it continues higher. So that the fact that we could hold above 50% and break above 131 would be a bullish outlook. First of all, 131.80 will be tested, and if the market can push above 131.80 and 132, we open up the 2012 highs here, 133.25, 133.42 area. Okay, so testing some key support levels here. Here's the 1 hour chart again. Okay, but so far it's not showing any signs of slowing just yet. But we'll see throughout the U.S. session if this market bottoms out. All right, again, the pound has PMI data coming out throughout the week, and that can confirm, or if PMI is positive, it can put last week's GDP data sort of in hindsight, because that is for the first quarter, and if April data is better now, it can make that first quarter GDP data sort of, I wouldn't say irrelevant, but just less significant. Okay, so that's one scenario. The other scenario is if it doesn't break above 131 and it does stay, let's say, below 130.50, okay, what's a range breakout projection? One way is to use the width of your range and project it in the direction of the breakout, okay, as such. All right, so what we should look for is our 61.8% retracement level, as well as this sort of previous little consolidation area as a target. Okay. All right, so that is your pound yen. And finally, I want to talk a little bit about the dollar loonie, which got a boost today, or I should say the loonie got pressure today after the Canadian GDP data, right? So this is reaction from today's risk event. Let's take a look at that. Canada GDP data for the month of February, negative 0.2%. Okay. There was a expectation of 0.2%, and we missed it. Okay, that's a big miss. It's a significant miss from a positive 2 to a negative positive 0.2 to a negative 0.2. Okay, this is monthly data for February, so it's a little bit, maybe outdated, but it nonetheless it held the Canadian dollar off. Okay, it's been recently very strong, right? Let's go to the 4-hour chart. Now, we talked about this in our FX Times briefing earlier today, the bullish divergence, and again, tagging the lower Bollinger Band here, and then here missing it. So the signals I was talking about before, looking at other charts, we had it here. We had hit the Bollinger Band, missed the Bollinger Band, and we got a bullish divergence here. Okay. So we were talking about this earlier today at the FX Times briefing, and basically the bullish divergence at oversold levels according to RSI and according to your Bollinger Band. Okay. Now the bullish outlook. Well, this is a very strong candle, reactive candle to the Canadian data, but if you look at this market, it's basically sideways, right? And recently it actually added more bearish bias to it. Right? Look at this sideways market, continued the respect of 1.0050. Okay. And now the market's rallying. I think for this rally, it's going to be challenged at 99. Okay? The 99 psychological handle, and maybe a little higher. They'll give it some elbow space, but when we test this declining trend line, that's going to be key, because we did just break below 98.40, and then we're getting some kind of a pullback from that. Okay, but from 99.20 area, we could again look for a bearish outlook from there. Now, if you believe the market here is going to start to be choppy again, range bound again, then your bearish outlook should be limited. Maybe back again to this pivot, 98.40. As far as your reward to risk assessment, I would always take the more conservative target to make sure it is acceptable. It is at least 2 to 1. Okay. And also for this, you do have the wind of a bearish market on your back, right? And then here's a consolidation, and then another bearish swing here with a bearish breakout. So looking for resistance here, despite the poor Canadian dollar, Canadian GDP, would be my play for this pair. I think that Canadian GDP data will have some short-term effect. Maybe it will hold off these lows, right, at 98 for now. To hold off these, hold the market above these lows. But I don't think it can push the market back towards a bullish market. It's a bullish market in the very short term. Now, if it does break above 99.40, then I'll be wrong. Okay, 99.40 is what I see as the central pivot of this range. Okay, we have the range being 1.0050 down to 1.9840. So 99.40 isn't the exact middle, but 99.40 to 50 area, you see a lot of reaction there. See reaction there. See some reaction here. It's not an exact pivot on the pip, but it's an area that you should monitor, and a break above 99.50 can be indicative of a false breakout to the downside, and therefore intent to test the 1.0050 level. Okay, so that's the failed bearish outlook scenario. But even now, the bearish outlook should be scaled a little bit because of the bad Canadian GDP data, and maximum 98 would be the target. As far as conservative target, 98.40 should be the target for a bearish outlook, from around 99 up to maybe 99.20. But I believe a stop should be above 99.40. Okay. So, with the little time left, why don't we just do a quick reward to risk assessment of this trade plan? So let's say at 99, okay, you see some reaction there, you get in, but you fail to pick that fails to be the top, and it does push above 99, okay, up to say 99.20. Okay, so let's say at 99 you get a reaction, it comes down to 98.90, you get an entry. Okay, I think that's not going to give you a good reward to risk, especially if you don't have, especially if that isn't even the top yet. Okay, so basically I would plan on a couple of entries. The reason for that is if your first entry doesn't work out, and then the market does push a little higher, but it's still within the context of your bearish outlook, then another entry can improve your reward to risk. How does that happen? Well, okay, let's say 98.90 is your entry. The market comes up and gets towards 99.25, okay, and then falls back lower. So let's say at 98.90 and 99.20, you basically average 99.05, okay, 99.05, and if your risk is above 99.50, yeah, this is actually a lot of risk to the upside. Okay, let's say it's 55, that's 50 pips to the upside. Okay, to the downside, it's also not that great, right? It's about 60 something pips. So not a good reward to risk, okay, as far as considering the conservative bearish outlook. But if you look at the lows here, it's around 2 to 1. So from 99 down to 98, okay, if your stop is above 99.50, you barely get a 2 to 1. Okay. So be careful. It's a risky outlook. If you believe that the GDP data is going to hold the market above 98. Okay. So that's a conservative look. Okay. If you believe that the GDP data is not only going to hold off 98, but it should start a bullish cycle, then watch the break above 99, watch the break above this trend line. Okay, and then if there's a failure to the downside, okay, and it continues like that, respects these pivots here as support, then we're back into the ranging mode, and we could be heading towards 1.0050. The thing about a range is you want to catch the range. You want to catch the market at range support or range resistance, and you also want to go in the direction of the market before the range. That is, generally that's the way I would look at it. Okay, that has been working out at this resistance 1.0050. Okay. So this rally again would be a counter trend type of outlook. Okay. So not a trade that I would be in. Okay. So if it does happen, I'll miss out on this trade, but I would wait for 1.0050 again. And if Canadian dollar, if there's nothing significant to cause Canadian dollar's weakness, I would look for the market there again. I would look for a bearish outlook again from 1.0050. All right. All right. So that is pretty much it for me today. I guess another 10-15 minutes left in the hour. So if you have any questions or if you want to take a look at another pair to discuss risk factors, I can do that. Otherwise, I want to wish you guys safe trading. Trade well, and definitely always, I always talk about being conservative, being aware of the risk before looking at the reward of your trade setups. Okay, so that's it for me for now. I'll stick around for a little bit if you have any questions. Otherwise, you can still catch me at www.fxtimes.com. I'll be updating the outlooks for these pairs throughout the day, throughout the week. And you can also catch me in Skype. Okay, so in Skype, I am fan.yang.cmt. So in Skype, I'm in a Forex chat room where we all, throughout the day, we discuss trading ideas and risk factors and such. So catch me in Skype to follow up with the markets. All right. Thank you, Boyke. Thank you, Random Pipper, Susie. I think that's it for me for now. Bye-bye.